Welcome. The question is a KASNEB question. CPA, Financial Reporting and Analysis, November 2015, question 2B. We are doing past papers to help you in your revision for CPA sitting for April. Let us read the question. We go through the additional information and then we answer the question. CPA Financial Reporting and Analysis, November 2015, question 2B. The following information was extracted from the books of Bodeni Commercial Bank Limited as at 30th September 2015. Interest income from loans and advances to customer 5,014. Interest income from finance leases 4,680. Interest income government boards 2,010. Deposit with other banks 1,008. Interest expense on customer deposit 2,500. Interest paid on deposit with other banks 56. Fees and commission received 1,864. Foreign exchange commission receivable 110. Other operating incomes 1,500. Fees and other expenses 150. Impairment of loans and advances 840. Administrative cost 3,860. General operating expenses 3,140. Income tax expenses 2,100. Retained profits 16,640. Cash and balances with central bank 12,800. Deposit and balances due from other banks 19,200. Government boards and other securities 15,410. Loans and advances to customers 132,270. Other assets 715. Deferred tax asset 60. Other investment 156. Property, plant and equipment 2,250. Intangible assets 2,150. Ordinary shares of shillings 10 each 5,085. Share premium 90. Revolution reserve for 60. Statutory reserve 1,910. Customer deposits 150,995. Deposits from other banks 2,200. Current tax liabilities 1,145. Other liabilities 1,100. Deferred tax liabilities 1,446. Additional information 1. Property, plant and equipment is to be revalued to shillings 4,250 million. Remember our money is in shillings million. An allowance for unserviced loans is to be created at 2% of the outstanding loans and advances to customers. Intangible assets were impaired by 20% as at the end of the year. Required: prepare the following for Bodeni Commercial Bank Limited. Roman 1. Income statement for the year ended the 30th September 2015. And Roman 2. Statement of financial position as at 30th September 2015. Now we will work out this additional information. We first work out the additional information that are affecting income statement for the year ended, that is September 2015. After we are done with those additional information, we do the income statement, and then finally we do the additional information that affects the statement of financial position, and finally we do the statement of financial position as at 30th September 2015. Let us now look at the additional information number 1. Property, plant and equipment is to be revalued to shillings 4,250 million. This is 4,250 million. This additional information does not affect our income statement, because what we are required to do here is to calculate the revaluation gain, only that. So that one we will work out later. Additional information number 2, an allowance for unserviced loans is to be created at 2% of the outstanding loans and advances to customer. Remember, from your study, you have noted that from your study of financial statement for banks, you know that allowance for unserviced loans is usually treated as an expense. An allowance for unserviced loan, if you compare with normal financial statement of companies, it is just like, it is treated like an allowance for doubtful debts. So let us calculate the allowance for unserviced loan in working note number 1. Allowance for unserviced loan and advances to customers, it is to be created at 2%, so that is 2 over 100 of the outstanding loans and advances to customers. How much is the outstanding loans and advances to customers? That is 132,270. 132,270 million. And if you calculate that, you are going to get your allowance as 2,645.4. Then this allowance, when you go to your statement of financial position, this allowance is going to be deducted from your loans and advances to customer. This 2,645.4, we are going to take it to the income statement as an expense, but to the statement of financial position, we are going to take 132,270 minus 2,645.4. Therefore, the balance of the loan and advances to customer that you're going to take to the statement of financial position will be equal to 129,624.6. And now we are done with additional information number 2. Let us go to additional information number 3. Intangible assets were impaired by 20% as at the end of the year. Impairment of an asset is an expense. So this one is going to affect the income statement, and also it is going to affect the statement of financial position. So let us calculate the impairment of the intangible asset in working note number 2. So impairment is 20%, that is 20 of 100, we multiply by the value of the intangible asset, which from our trial balance is 2,150. So if you calculate that, you get your impairment as 430. That is 430 million. So this 430, we are going to take it to the income statement as an expense. However, to the statement of financial position, we are going to take 2,150, you less the impairment of 430 million. And if you do that, you are going to get 1720 as the value of your intangible asset at 30th September 2015. 1720 as the book value of your intangible asset at 30th September 2015. And I think now we are through with the additional information affecting the income statement. So we can directly go now to the income statement. We start with the incomes. From the trial balance, you have interest income on loan and advances to customers. 5,014 finance leases, 4,680 government board, 2,410 deposit with other banks, 1,008. All these four are interest income. So we go interest income. We have interest income from loan and advances to customer. That is 5,014. From there, you have interest income from finance leases, 4,680. Interest income from government boards, 2,410. Interest income from deposit with other banks, 1,008. 1,008. If you add this together, you get 13,112. That is your total interest income. Then you go to your interest expense, and you have interest expense on customer deposit. That is 2,500. Interest paid on deposit with other banks, it is 56 from the trial balance. You can check in the trial balance. And if you add this together, you'll get your interest expense as 2,556. So to get your gross income, you take this interest income, you deduct the interest expense. That way, you'll get your gross income as, that is 13,112 minus 2556. I'm getting 10,556. I'm getting 10,556. 10,556 as your gross income. Then you have some other income, that is fees and commission received. Fees and commission received, that is 1,846. Then you have foreign commission receivable, that is 110. foreign commission receivable is an income. Then you have other operating incomes. Other operating incomes are amounting to 1,500. That is other operating income. So you get your total income as, if you add all of this together, 10,556 plus 1846 plus 110 plus 1,500. This is 1864. Ten 556 plus 1864. Let us clarify this one. This is fees and commission received. Fees and commission received. Fees and commission received are 1864. 1864. So 10,556 plus 1864 plus 110 plus 1,500. I'm getting 14. I'm getting my total income as 14,030. Now we go to the expenses. We go to the expenses. You have fees and other expenses, 150 from your trial balance. Impairment of loans and advances, you have 840 from your trial balance. Administrative costs, you have 3,860. This is also from your trial balance. General operating expenses, you have 3,140, also from your trial balance. You have increase in allowance for loans and advances. This one we have done it in our working note number 1. Allowance for unserviced loan and advances, that is 2,645.4. Then you have impairment of intangible asset from our working note number 2. Impairment of intangible asset for 30. So we add all of this together to get the total of expenses. And if you add them together, I'm getting 11,065.4. I have added my expenses together. So I'm going to deduct all of these expenses from our income to get profit before tax. 14,030 minus 11,065.4. You are getting 2,964.6. 2 964.6. That is your profit before tax. Then you deduct your tax expense from the trial balance. How much is the tax expense? Your income tax expense is 2,100. Income tax expense is 2,100. You deduct 2,100. You are getting your profit after tax as 864.6. That is the profit after tax. Then you add the retained earnings brought down. Those are the retained earnings at the beginning of the period or the beginning of the year. How much is the retained profit at 1st October 2014? The retained profit was 16,640. And here 16,640. And you get your retained earning at the end of the year, or what we call the retained earning carried down, at 17,504.6. 17,504.6. And up to that point, we are done with the income statement, Boden Commercial Bank income statement for the year ended 30th September 2015. We are done with that one. We now work out the additional information number 1, which we said it is affecting the statement of financial position, and then we finally do the statement of financial position. Property, plant, and equipment is to be revalued to shillings 4,250. So we compare this value of property, plant, and equipment with we compare this fair value. Now this will become the fair value. We compare it with the book value of the property, plant, and equipment. So how much is the book value of property, plant, and equipment? It is 2,250. So if you take 4,250, let's do it in working note number 3. So the revaluation of property, plant, and equipment, we have seen that the new value is 4,250 million, and the book value in the trial balance is 2,250. So if 4,250 you deduct 2,250, you are getting your revaluation as 2,000. Remember, our figures are in millions. So this is 2 billion. So fair value at the end of the year, this one now is the revalued amount, 4,250. That one you are given. There's no need of writing it. Let us write it because of our statement of financial position. So the total revaluation reserve to be taken to the statement of financial position, the total revaluation reserve to be taken to the statement of financial position would be equal to this revaluation that you have calculated here. That is the 2,000. You add 2,000. You add the revaluation reserve brought down in the trial balance. How much is the revaluation reserve brought down? Revaluation reserve was 460. So we add 460 and we are getting our total revaluation reserve as 2,460. Then we have the aspect of the deferred tax. In the trial balance, you are given deferred tax asset, and you are also given deferred tax liabilities. Therefore, if you create a deferred tax account, this is the deferred tax account, the deferred tax liabilities is always on the right side. We have seen that the deferred tax liability is 1446. So that is the deferred tax liability 1446 from the trial balance, and the deferred tax asset is 60. Therefore, the balance carried down of the deferred tax, now it's going to be the deferred tax liability is, so here the total is 1460. We balance this account 1446, 1446. So the balance carried down of the deferred tax, that is the balancing figure, is 1386. 1386. You're getting your total as 1446. This is the figure we are going to take to the statement of financial position. You cannot take both the deferred tax asset and the deferred tax liability because they are supposed to be calculated in one account. You just take the balancing figure. Now we are done with our workings. We go directly to the statement of financial position. We start with assets. You are not classifying your asset as non-current asset and current asset because when you're dealing with banks or the financial institution, there are some loans that they give for period of more than 1 year. The borrowers are given a period of more than 1 year to repay back their loans, and there are some borrowers who are given a period of less than 1 year. Therefore, it is a little bit hard to distinguish between the current asset and the non-current asset when you're dealing with financial statement of a bank. Therefore, we call all of them as asset. However, if the question had distinguished or had differentiated for us, then we could make that classification of non-current asset and the current asset. So we start with assets. You have property, plant, and equipment. That one is 4,250. Property, plant, and equipment 4,250. Then you have your intangible asset 1720. Intangible asset 1720. Then you have cash at bank balances with central banks 12,800. 12,800. Then you have deposit and balances due from other banks. Deposit and balances due from other banks, that's an asset. It is 19,200. 19,200. Then you have government bonds and other securities. Government bonds and other securities, that's an asset. It is 15 for 10. Then you have loan and advances to customers. loan and advances to customer. We have calculated that one here. The balance of loan and advances to customer to be taken to the statement of financial position is 129,624.6. 129,624.6. Then you have other assets, that is 715. Other asset are 715. Then you have other investment. Other investment are 156. 156. There's no other asset, so you add all of the assets together. 4250 plus 1720 plus 12800 plus 19200 plus 15, 410 plus 129, 624.6 plus 715 plus 156. You are getting 183, 875.6. 183, 875.6. Then you go to your equity and liabilities. You go to your equity and liabilities. You start with the ordinary shares. From the trial balance, your ordinary shares are 5,085. Then you have your share premium. That was 90 from the trial balance. You have the revaluation reserve in our working note number 3, 2,460. Then you have the statutory reserve, that is 1910. Then you have your retained earning from the income statement, 17,544.6. 17,504.6. If you add this together to get your total equity, I'm getting 27,049.6. That is your equity. You go now to the liabilities. And when you come to the liability, you have the customer deposit 150, 995. Then you have deposit from other banks 2,200. Then you have deferred tax liabilities. The deferred tax liability in our working note number 4 is 1386. 1386. Then you have your current tax liabilities. Your current tax liability is 1145. That is from the trial balance. Current tax liability is 1145. Then you have Other liabilities 1,100, and if you add all of your liabilities together, let us quickly add the liabilities together. You are getting your total liabilities as 156, 8, 826. And if you add your total liabilities with the equity, you are now getting 183, 183. This is this total liabilities plus your equity part. This one plus this one. You are getting 183, 875.6. And you, as you can see, our statement of financial position as at 30th September 2015 for Bodeni Commercial Bank as balance. Therefore, that's mark the end of that question, and I'll see you in another question.